Hello and welcome to Sprott Radio. I'm your host, Ed Coyne, Senior Managing Partner at Sprott Asset Management. I'm pleased today to welcome back one of Sprott's managing partners and senior portfolio managers, Shree Kargutkar. Shree, thank you for joining us on Sprott Radio.
Thanks, Ed, for having me again.
Before we dive into kind of all things, particularly platinum, which has had quite a move this year, before we dive into that, tell us a bit about yourself and some of the work you're doing right now over at Sprott.
Thanks, Ed. I would say that the work that I do at Sprott is largely focused on all sorts of precious metals: gold, silver, platinum, palladium. And over the past several years, I've also started to look more deeply into some of these metals that are considered to be quote unquote critical, which would involve things like copper, nickel, cobalt, as well as lithium, and some of these rare earths, which are becoming more and more topical these days. These are all the different kind of commodities that I've been paying close attention to over the many years. And these commodities and the supply demand picture that all of these present tends to drive our investment decisions, which are largely focused on equities. So I am responsible for co-managing a lot of the different products that we have on the actively managed equity side of things. And these include precious metal mandates as well as the critical metal mandates. So when I analyze the supply demand trends, it help us make educated decisions in terms of which equities to favor and go from there. We also try and pay very close attention to what's happening geopolitically, because as we all know, the world is not a safe and calm place, and we have to make sure that we are allocating investor dollars into regions where the risk reward tends to be more into our favor. And we try and steer clear from areas that are undergoing lots of, I guess, transition, be it from a geopolitical standpoint or just not the best places to operate in safely.
I think it's interesting that you brought up critical materials as an extension of the work you're doing because, platinum and palladium, I guess for that matter, are both precious metals, but they've certainly for a long time been really a critical material. And you could argue maybe, before that term was even coined, they were the original critical materials when you think about how they've been used. Talk about that a little bit because we've seen this tremendous price move, particularly in platinum, and it seems like palladium's sort of trying to catch up now. But what's driving that move right now? Is the world kind of woken up that, hey, maybe we're not all going to have electric cars, or what's driving this move today in the market?
I think the move behind platinum is best explained by the market's recognition that there is not enough platinum coming out of the ground, being recycled back into new supply to meet the existing demands. So we're currently entering the third year of a structural deficit for platinum. And the above ground stockpiles, which have typically been what's used to kind of bridge the gap between supply and demand, are starting to exhaust themselves. And as the market has recognized this, they've repriced platinum from $900 to circa $1,300 as we speak right now. And I think that there is much bigger upside still to come in platinum because this is a very small market. And the most important thing that I can tell you about platinum is that the demand for platinum is quite price inelastic in that platinum is critical and there are very few substitutes for platinum. And palladium is one of them, but it's not always a perfect substitute for all the different applications that platinum is currently used for.
And if I heard this correctly, I also heard that, or I've read that when you do try to substitute palladium for platinum, you need more of it to get it to do the same things that platinum can do. Is that correct, or am I misled on that one?
Depending on what application I've looked into, the ratio of palladium to platinum can be a little bit different.
Okay.
And it also depends on the end user and how they're formulating the actual catalyst that's going in there. The automakers have become pretty good in terms of trying to balance the amount of platinum or palladium going into the catalyst to try and ensure that they can still meet the minimum standards that are going into place. But what has been changing is the emission standards. They have been getting increasingly more and more stringent over the years and decades. And it's a good thing because clean air is something that everyone can get behind. And the way you get cleaner air and cleaner exhaust is by introducing higher emission standards, which have essentially been part of the reason why there has been more palladium going into the catalytic converter and more platinum. But in terms of the actual ratios, I think that is a bit of a moving target based on what I've studied.
And, you mentioned also a moment ago about you see a potential further rise in the platinum prices. I mean, you don't have to go back that far in time to look at what happened with palladium. If I have my numbers correctly, from 2016 to 2021, it went from like 600 or 700 bucks up to over 3,000. These things, when they move so quickly. I mean, how do you try to capture that? Are you seeing a potential similar setup right now based off your experience with platinum?
I think so. I alluded to this before when I said that the end users of platinum and palladium, there's a reasonable level of price inelasticity here. So if palladium was at 600 and your car needed to have the palladium in order to go on the road, then you didn't care if the palladium was $600 or $1,000 or $2,000 or
Mhm.
$3,000. If you wanted to build a car, you needed to inject palladium into the catalytic converter. And at the end of the day, it was only a few $100s worth that was needed to put a $50,000 car, a $100,000 car on the road. And the same things can be said for platinum as well. The end users are quite inelastic in terms of the price that they're willing to pay because both platinum and palladium, and we're talking more about platinum, and I think platinum is in the same situation like you described between 2016 and 2021, whereby the above ground stockpiles had been depleted. The supply was just not keeping up and still is not. And we're currently in a scenario where the structural deficits in platinum are translating to higher and higher metal prices for platinum. And in terms of where the price of platinum can actually go, if you go back 20 years, I mean, we're talking about platinum again in 2025, but 20 years ago, 25 years ago, platinum used to regularly trade at a big premium to the price of gold. Platinum is more rare than gold. It is much more difficult to get out of the ground than gold. And platinum used to be more expensive than gold.
Mm.
So it is not out of the realm of possibility that we could be talking about a significantly higher price for platinum. And perhaps there could even come a point in time where platinum prices once again are trading at a premium to the price of gold. And gold right now is circa $3,300.
And we obviously at Sprott love gold, but gold is money for sure, but it doesn't have a whole lot of other uses like something like platinum. So that seems to make a lot of sense to me. Talking about extraction, talking about pulling things out of the ground, how should someone think about the physical part of the market versus the miners? Is there an opportunity to be looking at miners that specifically are mining this, or is it part of a bigger ecosystem of a mine and platinum's just part of it? Or do we just see actual platinum mines out there?
That's a great question, Ed. And what I can tell you is that platinum usually comes out together with other platinum group metals. And this includes palladium, rhodium, and in some instances, a little bit of gold comes out as well. There's a soup of different metals that present themselves when you're mining for platinum or mining for palladium. And typically, what's been going on is that a lot of these mines are in areas that are not the best position from a geopolitical perspective. They're not the safest, or if they are in a reasonable jurisdiction, as one might perceive, then they don't have the type of, I guess, access to sound infrastructure that is necessary to continue producing the metals at a rate which is sustainable or it allows for even expansion of these mines. So case in point, South Africa, which produces 70 to 75% of platinum annually. This is mine production. It's dominant in the production of platinum. But South Africa has been dealing with a number of different problems. They have great difficulty in being able to maintain its supply of electricity, which is quite important because a lot of these mines are ore a mile and a half deep, where things get really hot and ventilation becomes extremely important. These mines are oftentimes using extremely antiquated mining methods, which is very much focused on human power versus technological innovations, which are now present in many parts of the world. And these are the kind of issues capital starved mines, poor access to electricity, which makes it quite difficult for South Africa as a jurisdiction to be able to easily increase its production should the prices rise to a level that it makes sense. On the other hand, you have places like Russia, which were not exactly considered to be a great jurisdiction as far as being able to do business for Western countries. And this was before 2022. And then the Ukrainian invasion of happened by Russia, and the Russian production of platinum and palladium that's been coming out is now largely ending up in the Chinese hands because it's become a bit more difficult for Western sources to be able to source their platinum and source their palladium from Russian sources. So those are the two dominant suppliers of platinum and palladium in the world. And between the two of them, they account for nearly 80-90% of platinum and palladium. So it is a very difficult picture as far as being able to invest in these companies and invest in these countries to secure the supply of platinum and palladium today.
So it seems that as long as the demand stays where it is, and in all likelihood, from what we're seeing going higher, it feels like that supply demand imbalance is probably here to stay for the foreseeable future. Is that fair to say?
It's certainly fair to say as far as platinum is concerned,
Hmm.
because even if the demand does not increase, supply is certainly not increasing. The supply has been consistent for many, many years now, and demand has been consistent. But what's been happening is that the demand is far outstripping the current supply of platinum. So demand doesn't have to grow. Supply is not growing. As a result, the prices of platinum have to adjust to a level where maybe at some point in time you can bring on mines that don't produce platinum and palladium out of South Africa and out of Russia, and perhaps incentivize production out of other more friendlier places like the US or Canada or what have you.
And then also, and then last thing on the mine side, and then we'll go back to the physical side of the market for a moment. But on the mine side, how's the health of that industry as it relates to this? Any new discoveries? And if there are new discoveries, what's the realistic time frame of from time of discovery to call it time of extraction? What does that look like? But how's the health of it, and how long does it take to get a new mine online?
It's safe to say that there's virtually no major company that's out there trying to discover platinum and palladium today,
Interesting. Okay.
just because it is such a small market and it is so difficult to be able to bring on a mine that is mining for platinum and palladium outside of Russia or South Africa. So the health of the industry itself, I would say, is quite precarious because at today's platinum prices and today's palladium prices, there are very few miners, even in South Africa, but you have access to cheap labor and you're still not able to make money at today's metal prices. So we are currently in the process of seeing some of these really old tired mines slowly get decommissioned. And
Hmm.
as a result, there is even a threat of some of the supply for platinum and palladium to come off the market. Now, to offset that, Ivanhoe, which has a division called Ivan Platts, is currently building out a new mine in South Africa, which will only replace some of the lost production that is happening, but not add to the production and significantly change the supply side of the equation right now.
So nothing material is really going to change this dynamic. It seems like then that the
No,
supply demand depth is it's sort of here to stay, at least for the foreseeable future.
that's correct. Barring any major changes in the technology, that means that you need less palladium and less platinum going forward.
Is there any other tech out there outside of driving an electric car, right? Which at one point by 2030 we were all going to drive electric cars. That clearly not going to happen. But is there anything else out there that can replace this kind of equation from a tech standpoint, where we don't need as much platinum or palladium?
The biggest worry for platinum and palladium over the past few years has been the erosion of the market share of
Hmm.
internal combustion engines. Because, as we all know, electric vehicles don't really use a lot of platinum palladium. They don't really
Right.
have exhaust gases that come out of it. But what the world is now starting to come to grips with is the reality that it's very difficult to significantly scale up battery electric vehicles and have them take on the type of market share that some people were thinking was going to be the case, both presently as well as over the next few years. So while the number of BEVs, the battery electric vehicles, continue to increase and the market share that they're taking is not happening as quickly as many forecasters had predicted, it is a combination of BEVs being too expensive, also having some range anxiety issues
Yes.
especially for people on our side of the world, especially for people that live in northern climates where the lithium cars just don't provide the same type of range when the weather gets cold. So as a result, what we've seen is that the internal combustion engine cars are certainly sticking around. The production of those cars is certainly not declining by any meaningful level. But like we discussed earlier, the emission standards are tightening, which means that the platinum and palladium going into each vehicle, even if the engines are smaller, is going up and up. So the demand is there, the supply is not keeping up. And as far as the technology goes, there's over the next 5, 6 years, it's very difficult to contemplate a world where all of a sudden people are not making internal combustion engines anymore. You may see a change in the mix. So maybe instead of pure ICE engines, you'll see a bigger uptake of hybrids.
Mm-hmm.
That's certainly happening. We're starting to see companies like Honda, for instance, start to take a stronger look towards having hybrids be the bigger portion of their overall sales. But again, that still is an internal combustion engine in there. It's still going to include platinum and palladium in there. So the answer to your question is no. There's nothing that I see over the short term that's going to take away from platinum palladium demand.
Okay, so we talk about the industrial application, which obviously that's the primary driver. You touched on jewelry and so forth. What about general investor demand? Are you seeing more people look at it as a pure investment, the way we've seen gold and silver over the years?
The investment demand is quite interesting. And as far as platinum in particular goes, we have seen an uptake in the amount of investor interest coming
Mhm.
towards platinum for two reasons. Number one, the price of platinum is absurdly low. You can buy platinum physically cheaper today than it costs an average miner to make that ounce of metal.
Wow.
So there's that aspect. You can buy something for less value than it costs to make it. So that's attractive demand. And then there's another or subset of investors who are looking at it more from a perspective of supply demand. The clear takeaway from a supply demand analysis is that there is not enough supply of platinum. So investors, as a result, have started to take matters into their own hands. They recognize that there is not enough of this shiny white metal around, so they're choosing to hoard a little bit of it. So we have seen increase in the investment allocation for platinum in particular over the past few years.
And so if I'm an investor and I'm saying, gee, I want to participate in this, how would you, without knowing someone's financial, portfolio and stuff, we're not making recommendations here, but how would you have someone view platinum then? Would it be in the commodity space? Would it be in the alternative asset space? Like where would it live in an investor's portfolio in your view?
Platinum is a very unique metal in that it has both of an industrial side as well as a precious side. And like I said before, there have been, generally speaking, platinum is traded at a premium to the price of gold because it is
Mm-hmm.
more difficult to get out of the ground and process it, and because it is more rare than gold. So typically, we have seen platinum be considered to be more of a bigger luxury, if I can say, than
Okay.
gold has been, right? So, how do investors get exposure to it? They can choose to buy the metal. I can certain suppliers will sell you the physical metal. They can certainly look to invest in certain ETFs that hold the metal.
Before we sign off, I always like to just, throw out there, did I miss something? Any other questions or topics or points you'd want to leave the listeners with that they should be paying attention to that maybe we didn't address?
The only thing that I can point to, which we didn't really hit on, is I'm starting to see some anecdotes of platinum jewelry becoming more and more prevalent in places like China and India today. Some of it perhaps has to do with gold trading at the levels that it currently is. And perhaps it has to do with the level of exclusivity that comes with having a platinum chain or a platinum ring. That's something which is a bit of an X factor in terms of what can happen on the demand side of the equation, so far as platinum is concerned. I would be paying a little bit of close attention to what's happening on the jewelry front. I don't have enough data right now to say that this is a trend which has legs to it. But should it turn into a trend with legs, then we're going to be talking about even bigger deficits for
Mm-hmm.
platinum. So that's something that we didn't touch on, but it's definitely worth mentioning.
Excellent. That's a good point to leave us with. Well, Shree, it's always a treat to see you, talk to you, and I appreciate you making the time today to join us on Sprott Radio.
Anytime, Ed. Thank you so much for having me.
Great, thank you. And once again, my name's Ed Coyne, and thank you all for listening to Sprott Radio.
The This podcast is provided for information purposes only from sources believed to be reliable. However, Sprott does not warrant its completeness or accuracy. Any opinions and estimates constitute our judgment as of the date of this material and are subject to change without notice. Past performance is not indicative of future results. This communication is not intended as an offer or solicitation for the purchase or sale of any financial instrument. Any opinions and recommendations herein do not take into account individual client circumstances, objectives, or needs, and are not intended as recommendations of particular securities, financial instruments, or strategies. You must make your own independent decisions regarding any securities, financial instruments, or strategies mentioned or related to the information herein. This communication may not be redistributed or retransmitted in whole or in part or in any form or manner without the express written consent of Sprott. Any unauthorized use or disclosure is prohibited. Receipt and review of this information constitutes your agreement not to redistribute or retransmit the contents and information contained in this communication without first obtaining express permission from an authorized officer of Sprott.